Hey, welcome to the Aeromir Roundtable. Today's the 10th of July, 2025. A special guest, Amy Meissner. Amy and I have known each other for many years and worked together on many projects. And this is the latest iteration of the TimeEdge. I know Amy and I have been talking about this for a long time, and it's finally here. So it looks like a great trade. Amy's a great teacher, lots of great results, lots of students that are very happy. So I know a lot of people are excited to hear about this. So Amy, why don't you tell us all about it?
All right. Thanks, Tom. Thanks for the introduction. Welcome, everybody. I know we have to go through the legal stuff, so I'm just going to get rid of that or get that out of the way real quick. Aeromir Corporation and Amy Meissner and AM Options Trading, my company, are not broker-dealers. The webinars and seminars given are for educational purposes only. Options involve risks and are not suitable for all investors. And past performance, of course, is not indicative of future results. This presentation is for personal use only. Oh, thanks, Nick. I just saw that little comment there. Anyway, sorry, let me get back on track here. Okay, welcome everyone. Thank you so much for being here. If you're watching this, I'm sorry, I'm getting confused here. This presentation is obviously about the new strategy that I've been talking about, and I'm super excited to introduce it to you. It's called the TimeEdge Weekly Option Strategy. It is a rules-based approach that I've been working on for a while, and it includes a lot of my students' requests. So obviously I have a lot of students with all my other strategies that I do and the alert service, and I really appreciate all your feedback. And I take all of that to heart and I take it in, and that's where I come up with things that incorporate what you're looking for. And that's where this came about as well. And I think, it's built to perform obviously in today's market, and it gives traders a way to stay consistent, but simple, but still being able to target those big returns. This strategy, I designed it for the SPY to have a little additional liquidity and less slippage. That was something that was asked about, but of course it translates into the SPX and also could be translated into other ETFs or indices as well. And the best part, of course, is you don't have to sit in front of your screen all day. So with that, let me go through what I'm going to be talking about throughout this presentation today. Of course, the introduction into the new TimeEdge Weekly Option Strategy. I'll go through its performance, results, and the key metrics so you can see what it's capable of. Then I'm going to show some real trade examples so you can kind of get a feel how it plays out in real life. And I'm also going to talk a little bit about a bonus strategy that I'm going to include. This is a simple weekly trade, doesn't require any adjustments. And finally, I'll share the details on the new workshop, TimeEdge workshop, and how to sign up when the live classes start, and a special launch price as well that can be taken advantage of right now. And I apologize for my dog kind of whining in the background. I decided to set up in my office. It doesn't have I moved recently. My office doesn't have a lot of furniture in it, so it's a little echoey in there. So hopefully it is not in this room, but also my dog is here as well. So so hopefully he will settle down. So excuse me. So anyway, for those of you who are new to my work and me, just a really quick intro. I've been trading since the mid-90s, became a full-time options trader in 2006. And my focus has always been on high probability option strategies with a goal of generating income, regardless of what the market's doing. And I'm a very outdoorsy person and I like enjoying life. So I don't want to sit in front of my computer all day. So my strategies are created with that in mind as well. Everything I teach is, designed to be repeatable and manageable and to fit into real life. So I've also done several speaking engagements and presentations for lots of different trading clubs. Of course, you see me here a lot on Aeromir because this is my main place to be, and I love working with Tom. And I've also have here trade alert services, workshops, video courses. I'm sure you're familiar. If you are familiar with me, you're probably familiar with my kind of flagship strategy, the A14, the HV7, the AIC22, the time zone, which is going to be refreshed shortly after this one launches, the nested iron condor, which has started off my teaching career on that, and now, of course, the TimeEdge. All right, so what is the TimeEdge Weekly Strategy? It is a rules-based time spread, and a time spread, but what I mean by that is a time spread is like a calendar or a diagonal where you have two different expiration cycles, and you could have the same or two different strikes as well. It's designed for the SPY, but also translated directly into the SPX as well. And as I mentioned earlier, it can adapt to other ETFs and indices. And the nice thing about time spreads is they have positive theta and vega, where a lot of strategies that we trade, like iron condors and credit spreads and things like that, have positive theta, but they have negative vega. So this kind of flips that around. It has that positive theta, but it also has positive vega. So if we have some kind of a big event that happens and the market kind of moves and volatility goes up, it actually helps the trade. But even during higher volatility, it doesn't necessarily mean it's a bad thing either. So there are things to look for to be able to trade this regardless of what the volatility is doing. And I'll talk about that obviously in the course, but is a very short term. It uses weekly expirations. Typical trade is held on average 3 to 5 days. So let's just say average 4 days. There is a ability to trade this every week. So you can put on a trade every week. And I know you guys are going to love this because this is something that's been requested many times. There is only one maximum adjustment. So if there is an adjustment that needs to be made when you're managing the trade, there's only one that needs to be done for this strategy. So I'm sure you'll appreciate that. That makes it very easy to manage, of course, every week. So it's repeatable and it's very structured. It's very rules-based. So why it works. It profits from time decay, positive theta, and that structural edge of the time spread setup. So where you're selling the front cycle, you're selling as much premium as possible, and that premium decay, or the theta decays a lot faster in the front cycle than it does in the back cycle. So you can use that as kind of an edge where you're getting much quicker theta decay on that front cycle, which is where you're collecting the money from. So that's one way it has a very nice edge to it. I set it up as a neutral setup, which avoids directional bias and also avoids emotional trading. And you don't have to, guess which way the markets are going. It has two very simple predefined adjustment paths. So there's only one maximum adjustment that can be made, but I do offer two different adjustment paths depending on what your capital allocations are and your preferences. You can kind of mix and match them, and I'll talk about that in a little bit. It also performs in a variety of markets, whether it's a bull market, a bear market, a choppy market. It performs in all of these different types of markets, and it has defined risks. So it kind of contains the risk and makes the decision making very simple. So let's take a look at what the numbers look like. Now, what I did was I always test all my stuff and I trade them live as well. But I want to test them. And I use a program called OptionNet Explorer, which has 5-minute increment real life data. So it actually shows you what those options and strikes were trading on a 5-minute increment basis. So you can get, really down into the weeds there. And, occasionally there are some pricing that, kind of doesn't really match. And I can tell when that happens, and I avoid those times as well in my testing. So these particular results are from a test that I did using 10-lot SPY position. It can be traded smaller or larger, but I used a 10-lot SPY position, and I did it every other week. And I started in January of 2022 and went through May 2025. That was when I stopped actually I went through June, but this particular chart is, I think, through May because I was finishing up the presentation and so forth. And this does not include any compounding, so there was no compounding done here with profits. That can be done to increase the growth, as I know some of you have learned through my A14 classes. And I also skip trades during major holidays, which is part of the rules. Not that they have to be, it's just, that was just part of the rule set to keep people, not having to do things while there was a lower volume and the pricing maybe not be as good during that time. But you can see here, there is a consistent performance through some really tough market conditions that we had during that time from 2022 to 2025. We had a lot of different markets going on. The green and blue lines kind of show those two adjustment paths that I was telling you about. One of them, the green line, is that minimal margin adjustment, which keeps margin low. So if you have smaller accounts or you don't want to increase margin during, if there's an adjustment that needs to be made, you can follow that path. And then the expanded margin adjustment version, obviously, that is a little bit different, but you can see that they kind of follow along. They're very similar in win rate and drawdowns and things like that. All right, so here's a little deeper look at the numbers for these two adjustment styles. Again, I used a 10-lot SPY trade, but this strategy can be traded smaller size. On the left is the minimal margin method. And as you can see here, it has a nice high win rate of 83%. So during this test, there was 72 trades. Again, I didn't trade it every week during the test. I just did it every other week, but it could be traded every week. And out of those 72, 60 were winners and 12 were losing trades. So that was an 83% win rate. And it's a pretty strong return. Using up to $2,500 capital for this method, and most of those trades were under that anyway. For the 10-lot SPY, the capital was more than tripled in using just two trades per month, not even every week. So that came out to an average of about 98% annual return without compounding. On the right-hand side, you'll see the expanded method of adjustment method. And this method requires a little more capital, hence the name expanded. So this one actually, I double the capital for this. Same amount of trades, it's just a different adjustment style. This one had a little bit of a higher win rate, 90% win rate. But of course, it needed a little bit more capital. So with a 10-lot SPY trade, it had an average of a 76% annual return without compounding. So a little bit lower return without compounding, but it gives you a little bit more flexibility, a little more theta to work with. So, you can choose what works best for you based on your capital and your comfort. And, maybe even mix and match is probably the best way. Like sometimes you might use one method over another. But that's one of the things I really love about this. It's flexible and it doesn't compromise performance, even though it has that flexibility built in. And I see a lot of questions popping up. And as you guys know, I like to wait until the end and I will answer every question and I'll go back and make sure that every question gets answered. So
I'm building that question page, so don't worry about it.
Oh, perfect. Okay. So don't worry. I will definitely get all your questions. All right. So it's basically, as I said, it's designed for traders who really value simplicity. That was another thing that a lot of my students requested. So, most of the stuff I do is pretty simple, but I'm trying to make things even more simple. So again, there can be one setup per week, but you can choose which weeks you want to enter and which weeks you want to skip. It's not necessary to overlap trades in general, because even if you trade it every week, the average is about 3 to 5 days in the trade. So even if you did one every week, you probably wouldn't overlap very often, but you can just put one position on at a time. And if one looks like it might overlap, just skip that next week. So there's no need to overlap trades. It has a very clear rule set, which reduces stress and it eliminates a lot of that decision fatigue that comes with a lot of strategies. But you still have to be involved and think. But I did try to make it as simple as possible. And it's very scalable. It works for smaller, large accounts. As I mentioned, I'm using the SPY, but it can be traded in the SPX with the same exact rules, and it can be translated into other ETFs or indices or even stocks. And it pairs really well with other strategies. So you can combine it with strategies that you might like the A14 or the HV7 or the AIC22, because it's in a different you're using an ETF maybe instead of the SPX index, it'd be easy to pair with that. All right, so let's talk about planned capital and profit targets. So the planned capital can be really low for this. So if you're just trading like a 2-lot SPY trade, it can be as low as $500 per trade. But I'm trading, like I said, a 10-lot SPY trade in the examples, which is about a $2,500 capital per trade, even though most of the time it's under that. The expanded margin adjustment method uses double that. So for a 2-lot SPY trade, it would be about $1,000. For the 10-lot that I use in the examples, it's about $5,000. And again, a lot of times I don't hit that mark. Profit targets are pretty easy. It's basically, I kind of probably made this a little more complicated than it needed to be. It's basically, I'm looking for 10%. So I want to get 10% of, maybe the best way to say it is just 10% of the original margin or the original risk that I put on the trade. If I have an adjustment, which is again, only one adjustment, if I use the minimal margin method, it stays at 10%. If I use the expanded margin method, it's either 10% of the original or just 5% of the new margin that I'm using, is another way to look at it. And then the losses are managed with the trade management and exit triggers and rules. It keeps losses under control so that they're not overpowering any of your winning trades. And as you can see here with, if I go back here to the statistics, with like, for example, in the minimal margin method, 17 winning trades in a row and only 2 times were there 2 losing trades in a row. And then with the expanded margin, 24 winning trades in a row was the largest, and there were 7 total losers, but they happened, one at a time. So, and they're not overpowering the winners. So it has that's why the chart has a very nice positive expectancy like that. And the win rate, as I mentioned, oops, I needed to change that. I called it something different. So that's the minimal margin, and this is the expanded margin. And I can re-give you that slide, but that's probably not too important there. So you can see there with the win rate for the minimal for that test was actually 83%, and the expanded was a 90% win rate. So one of the things that I like about this as well is it's very flexible. And this is one of the things that a lot of people liked about the time zone strategy, was that it's flexible to your schedule. So you can do a trade every week, but if you prefer low frequency, like I did with these tests, where I only did it 2 times per month, or maybe you just want 1 time per month, or skip weeks with earnings or holidays or travel, or life gets in the way, right? You can still have some strong, consistent results even with less trades being put on, and that equals less screen time as well. Although the trades are set up so that you don't have a lot of screen time even when they're on once a week. But if you want some maximum growth or try to reach even higher returns, then you can try for trading it weekly. And of course, you can also additionally add that compounding, which can double or triple long-term performance as well, as I'm sure a lot of people have seen in the A14, as including myself. All right, so, and yes, the profit target is based off the max margin. Okay, I'm not supposed to be answering questions. I shouldn't look over there right now. All right, so let's look at some trades. So let's look at some performance here. Okay, so as I mentioned, I went back to January 2022 and did these 3.5 years of testing with 2 trades per month. In 2025, I actually did 1 trade per month, but I didn't include it in here. I just, it's in the trade logs that you'll get, but it's here I just did 2 per month just to kind of follow along. So 2025 didn't change the average per year, so to speak. But as you can see, 72% of these trades didn't require an adjustment at all. That's a pretty high percentage rate. So so that total of 72 trades, out of 72, 54 of them were no adjustment was needed. And as you can see, that's an 87% win rate on those no adjustment trades. And 7 times the trigger was hit to exit the trade. So I just kind of put in here on the left-hand side just a really quick snapshot of, I picked a few trades from each year, 2022, 23, 24, 25, just to kind of give you an idea. And I just randomly grabbed stuff, so it would just be, this is what I'm seeing. And as you can see here, the average days in the trade, there's a few, average days being 6, but some of them are, like in 2025, we had some trades that were only 1 day in the trade. And then, a lot of times there's 2 or 3 or 4 trades, but I just happened to pick some that had a little bit higher days in the trade, but still pretty reasonable. These include weekends because Option at Explorer does include the weekend days, so these are not trading days. Most of those include 1 or 2 days worth of weekend trading there, or 2 days of weekends there. And as you can see, I've also included commissions and any fees, just based on this the standard. Most people kind of get a pretty good rate on the SPY. So I put in 65 cents per contract, opening and closing. And the profit and loss, I put in dollars as well as percentage based on the margin that was used. So you can see here, even though, these were not adjusted, so that's why they wouldn't have gone up to a higher margin rate. They're all, even the ones where I would have added an adjustment, it would still have been below a lot. Most of them have been way below $2,500. But I'm basing the profit percentage off of the maximum margin, or in this case, since there was only margin from the start, that maximum risk or margin that was in the trade, which is basically, for time spreads, it's what the trade costs. But let's look at some trades that did require adjustments. So I've got a few of those to show. So these are all from 2025 because I wanted to show you some recent examples. So in this particular example, the trade started with the SPY rising about 2%, I think it was a couple days after entry, something like that, and it required an adjustment. Now I could have picked one or the other adjustment method. Here I'm showing the minimal margin adjustment method, and it was just taken to kind of maintain that structure and that low risk and kind of flatten things out. And a few days later, the trade reached not only its profit target, it actually exceeded it and had a pretty good gain of 20%. So, quick in and out. This next example shows another one using that low capital path. But in this case, the market dropped and I did have to, the margin increased very slightly in order to stay into the trade, but the risk graph remained, favorable throughout the life of the trade, which was, just a few days, and the risk reward balance was preserved. And this trade reached a nice gain of 16% in a very short amount of time. And this example, the SPY dropped very soon after entry, and the expanded margin adjustment path was used for this particular example. So this allowed for additional theta to be entered into the trade, and it handled this market move really easily. This was during some additional volatility as well. So a few days later, this one reached and exceeded its target profit as well. Okay, so I also wanted to mention, something I was thinking about when I was talking about these examples. It'll come to me. You probably have a question about it in there, but I'll just move forward. That slipped my mind. Apologize. Okay, so what is this workshop all about? What's included? I'm going to go through all of the core concepts of the TimeEdge strategy, what gives its edge, why it works, all of the rules and guidelines for the entry, the adjustment. That includes both adjustment styles and what the adjustment is and how to do it. And of course, all of the exit criteria. And I do this for the SPY, but it's translated to SPX. I even show some examples in the SPX. So as well as several step-by-step examples in the SPY in a variety of markets, whether the market's going up, down, choppy. I want you to know, as I do with all of my courses, how do these trades handle all these different market environments? I mean, I can't replicate exactly what's going to happen in the future, but I want to kind of have an idea of like, how comfortable I am in different markets, because I want to create strategies that can handle things that are thrown my way without having to worry about trying to guess direction or, trying to make a play and be more biased to one side or the other. It'll include the complete trade logs of all the back tests that I do, so you'll get that. And there's a private community for students to interact with each other. We're going to be using a new community tool to try to see if that's something that we can use in the future. I'll talk about that a little bit as well. And then, of course, as always, after each class session, I will do a live Q&A session and to answer your questions right then. There's a couple bonuses. One is a no-touch weekly strategy that I'm going to include as well. It's also a time spread. And it'll include all the setup and exit criteria. There's no adjustment criteria because there's no adjustments. It's a no-touch strategy. And I'll show you examples of that as well as give you the trade log for that. And then additionally, about 30 to 60 days after the original live classes, this is something I've been doing a lot in my previous workshops, and it's worked out really well, is I want to give you guys a chance to absorb the material, maybe play around with it a little bit. Then that way you're going to have additional questions that may have not come up during the classes when they were live. So I'll let you have some time to do that, and then we'll have an additional live Q&A session to answer those questions. And then, of course, everything is recorded, so they will be in the class page, available for playback at your convenience to rewatch those as well. So just a little bit about this bonus strategy that I was just talking about. It's a very simple, no adjustment weekly strategy. It can be entered again every week. It's a very simple setup, no adjustments needed. It just has a simple 10% profit target and a 10% stop loss target. Now, obviously, it's not giving me the 80 to 90% win rates as I'm doing with my managed trades, but with a 67% win rate in testing, it has a very nice positive expectancy, especially since I have that stop loss in there. So you can see here, this is a chart of and statistics of the results of this no-touch strategy. This one went 2023 through 2025. Again, I did a SPY 10 lot max trades here, so some of the trades were a little bit smaller, no adjustments. It had a little bit of trouble, in 2025 a little bit, and then kind of came roaring back. The starting capital that I used for this test was $12,500. If you just do a one lot trade, it's about $1,250. So this one's a little bit more capital intensive. The ending capital at the end of this testing period was tripled. So it's about a 191% total return and a 76% annual return during that test. And again, I ran this every week. So unless, something triggered it not to run it, there are certain rules that go around it where it might skip some weeks. But in this particular test, there was 114 trades with 76 winners. That's a 66.7% win percentage. Average days in the trade were about 5.5. And again, my profit and stop loss targets were both 10%. All right, so what do we have here? Oh, so obviously I know that there's a lot of students watching this roundtable now of mine, and I really appreciate your input and your comments. And I just wanted to share some of what you are saying about my strategies and my classes and workshops that you've taken and my alert services. So I'm not going to read through all these, but it just, it's really humbling, and this is why I like doing this. The rewards are just amazing to hear some of these things, like Mike, who recently said, "Thank you so much for what you do. You literally are changing my life." That's just, I don't even know what to say. That's I'm so happy that it's doing what you're beyond what you're looking for. So and then a lot of people are talking about how my teaching style. So for people that are new to me, you can kind of get an idea of not only how my strategies are helping people, but also how they feel about my teaching style. Here you can always just stop the recording if you're watching this as a recording, or all of these testimonials are in the TimeEdge page as well, where you sign up. All right, so with that, let's get to it. The workshop itself. So we're doing something a little bit different. You'll get to the workshop landing page or whatever you call it, the sign up page. You can just go to aeromir.com/TimeEdge. Remember, that's got 2 E's in there. The first class starts next week. So we're starting this on Thursday, July 17, after the market closes at 4:30 p.m. Eastern time. And I have a special, so it's normally going to be $697, but for now I'm doing $200 off the regular price of $497. So I think that's a pretty good deal there. And I haven't done any inflationary, things to my prices in a long time. So hopefully I'll keep it that way. But one thing I do want to mention, and I know you guys have gotten a couple emails from me and Tom recently, and Tom just put that link in the chat, by the way. But we're doing a little experimentation. We're trying to streamline how, some of the processes that we're doing to make things easier. Tom is stretched a bit thin, so I'm trying to help out a little
No.
back end. No, you're never stretched thin. You never sound sleepy. And so we're trying something a little different. Plus, we're trying a different platform with this just to see if it has some features that might be beneficial for things in the future. So it's kind of an experiment. So we really want to get your feedback on it. So it's a little bit different. You'll have a different login, but it's super easy. But my business name is actually amoptionstrading.com, not Amy's Option Alerts, which you've seen in a lot. And I know that I just want to make sure that you have whitelisted my email addresses so that if you do see stuff coming from me, especially about the course and the links for the classes and things, I don't want you to miss anything. So if you can, put Amy at AM Options Trading and support at amoptionstrading.com in your contacts, and I think that whitelists it. Is that correct, Tom? So that it doesn't show up in your spam folder.
Yeah, it depends on the email client, but that should work.
Yeah. So, and then anything that goes to Amy at aeromir.com will go to Amy at amoptionstrading.com now instead of that old Amy's Option Alerts email. So probably should have changed that a long time ago.
Well, you still got it. So.
To mention that. And then here's the sign up again. So there you go. So hopefully you guys, I'm giving you what you've been asking for in this strategy, and I hope to see you in the first class starting next week. So with that, let's go through some questions.
All right. I've got a page I've been building. This is where the questions are. I'm up to 32 and I still have a few more to enter.
Okay. You know what? I'm going to do one more thing before going through the questions, just so people, since I was on that email kick a second ago, this is the page that it's going to take you to. But if you do sign up and you log in, again, it's going to be a different login, but it's super easy. You do it at setup. So easy peasy. When you log in, it's going to look a little different than the Aeromir site is all I was saying. And we do have a community aspect in there as well. So it's just going to look a little bit different. But again, I'm trying to streamline things and we're testing out this new community and so forth. So there you go. So it's not fancy, but maybe we'll make it look a little nicer later. Where am I here? Zoom. Here we go. There we go. Okay. So where is the did you send me something for that, or where am I going?
I put in the chat, you go to my.aeromir.com/1/TimeEdge.
Okay. All right, and then I'll move that over here. Oops, I have to sign in.
Shouldn't for that one.
Huh, it didn't go. Oh, can you
And paste it in the chat.
That's the I thought that was the landing page.
No, that's
that's the question page. Oh, okay.
That's the question page, right?
Got it. Okay, I'm sorry. I thought you were pasting the landing page there.
No, that's fine.
All right, so let me get that out of the way. Wait a minute. How do I get that out of the way? Okay, here we go. Okay, will TimeEdge have its own trade alert and community Slack channels? It will have its own community. It's built into this new platform, so we're going to be testing it out. It's not a trade alert, but I am planning on kind of expanding my A14 trade alerts to kind of have more of a bigger community where everybody, where we have all of our trades, but separated in a nice, easy to read way. So not everything's all lumped together in one channel. I am working on that, but for now, there is a community, but instead of in Slack, it's going to be in this new community, which you'll have on the page that I showed you. Where did I show it to you? Why is this not? Oh, it's not showing up because it's not on here. So here, so if you go to the private community, it's like, you can post things and things like that and talk with each other, send me support or messages, kind of like Slack, just within the course itself. So hopefully I'll get some feedback on that and see if it helps. Okay, so the result graph is over 3.5, but there's only 72 trades, but there were more weeks. And as I mentioned earlier, the testing was done with just 2 trades per month instead of 4, except for the last year I did do every single week for 2025. But in that graph, I only included 2 trades per month in 2025 so that, one year didn't outweigh the others. But I wanted to show that, kind of like the TimeEdge, you can have, minimum amount of trades or less trades, less time, less screen time, less trading the markets, and still have some pretty robust results. Why 10 SPY instead of 1 SPX? You can do 1. Actually, the way this strategy works, I like, because of the way the adjustments work, 2, or, it doesn't have to be an even number, but you want to have more than 1 contract, whether it's in the SPY or the SPX. So it'd probably be 2 SPX contracts. The reason I did that is because one of the requests was, people that wanted to trade something alongside the A14 or some of these other strategies where we're all trading in the SPX. They don't want to overstep strikes, and they wanted to have something that had absolutely, well, not absolutely no slippage, but as little slippage as possible. And the SPY is just, there's so many contracts trading, and you can get filled pretty quickly at the mid price for these without a problem. So that's why I did the testing in the SPY, but I also tested in the SPX as well, and there's examples of the SPX trades as well that I will share. All right, does the TimeEdge strategy work with the A14 strategy? Again, you can trade it alongside the A14 strategy, but if you want to make sure you're not stepping on any strikes, because it's also done on the weeklies, then you might want to trade it in the SPY instead of the SPX. But you could, or trade it at a different account or something like that. One thing I do sometimes when I have strikes on, for 2 different strategies is I just group them differently in my analysis program. So in my analysis, I can analyze each trade separately, but if I looked at everything lumped together, it would be kind of combined. But that gets a little more complicated, so it's probably better for more advanced traders. Are these cumulative profits net of all commissions and expenses? Yeah, I included commissions. SPY doesn't really have large fees, so I just included what's typical these days, which is like 65 cents per contract on open and close. If anybody is trading at Tasty Trade, which is where I trade, they actually have a cap. So once you go past 10 contracts, I believe, there are no additional commissions at all on open or closing. So you can actually benefit from that. I don't know if any other brokers do that, but I know Tasty does. But it doesn't work for the SPX. It only works for ETFs and stocks and things like that. Somebody's saying you have to be careful with margin and SPY, also ex-dividend dates. Yes, it is not like an index. This is something that you do want to be careful with as far as, you don't want to take it into expiration. So you want to be aware of those things. And we talk about that in the course as well. Why twice per month rather than every week? I think I answered that already. This was, like I said, just, I wanted to show that you can do this every week, but you can do it only, less and still get some really incredible results. Can this strategy be done on a daily basis? I suppose you could, because there's, so many expiration cycles these days. It might get a bit complicated, but if you like to trade that much, that's something, certainly you could do. I would be a little cautious because some of the expiration cycles on a daily basis aren't as liquid as others. So that's something that you might want to be aware of. So, and then not every underlying is going to have all of those expiration cycles working at the same time and having that type of liquidity that's needed. To me, it just gets too complicated. And I only tested it on a weekly basis. So, what is the correlation of this trade to other trades you manage within the community? The correlation, I'm not sure as far as if you mean exactly what you're asking there, but it's different. And, everything I do, every strategy that I create, I try to create something simple, something that can be traded nowadays on a weekly basis in a neutral manner without having to be directional and without having to have too much complications with or complex management. So in that respect, they're actually kind of similar, but there's just so many different ways to trade, different structures, that I'm introducing those types of strategies, but with different structures. And so I'm not sure if that really answered your question, but if you want to ask it in a different way, please do. So if I didn't answer that, I apologize. How's the performance in comparison to the A14? It's very similar. With A14, you're getting, with striving for 100% annual returns, trading every week. And with compounding, you can, exponentially grow that even faster. And with the TimeEdge, it's obviously, as you can see, its performance is very comparable. The only thing is, it's just very comparable. It's a little bit different. But I think the only difference is with the A14, there's a little bit more that you can do in times, there's going to be times when the A14 might outperform because it's more flexible, because you have more flexibility with adjustments, where this strategy is simpler, but you don't have as much flexibility because it's a simpler one adjustment only path. The results are for 10 lot SPY trades that require 2.5 in total for 10. Yes. So most of the trades are started with less than $2,500 for a 10 lot SPY trade. But that's, what I've felt was a good amount of capital for a trade of that size for this particular strategy. For the simpler, for the minimal margin method. If it was the extended margin method where you're adding margin, then I double that to 5,000 for a 10 lot. But again, you can, I wouldn't do more or less than a 2 lot, but you can, obviously cut that down by 5 by doing a 2 lot SPY trade. Obviously in the SPX is going to be higher because you want to do at least a 2 lot SPX trade. How's it been performing with these wild swings? So the examples that I showed actually, like especially for this last one, it actually is performing really well. And like I said, it's set up so that there's a trade management and exit triggers to kind of help keep any losses under control. But even with the craziness, and we've had some pretty crazy times during, within 2022 and 2025, and even last year was pretty stable, but maybe 2023. And as you can see here, it's pretty smooth. We don't have a lot of the losses that do occur. Of course, there's going to be losses. You're not seeing a lot of consecutive losing trades. So it's got a pretty smooth growth chart. Do you use any technical indicators to skip certain market conditions or avoid bad market environment? I do use some things to skip certain weeks, but they are not based on any technicals like they're based on more of liquidity and low volume and things like that. Some brokers, such as Fidelity, don't recognize different expirations as covering each other. Yeah, unfortunately, there are some brokers that are just not suited to do time spreads in, and but most of them are. You know, Schwab with Thinkorswim platform, which most people like to use, Tasty Trade, which is what I use, not a problem. Interactive Brokers, not a problem. I don't know about some of the other ones, Tom. Have you ever tried anything with like Robinhood or any of these other?
No, I've never used them.
Yeah,
I know Interactive Brokers is really good, but yeah, I don't
yeah.
know all the different brokers and who's good and bad with time spreads.
Yeah, I'd say like the top three is going to be, Tasty Trade, Interactive Brokers, and Thinkorswim platform, which is runs on Schwab. Those would be the top three. Is the profit target based off of the max margin of the trade? Yes, it is. And that's basically the cost, because time spreads cost money. So, but if there's an adjustment made, I always look at the maximum risk in the trade. Will this work on the Qs and IWM? It should work. Yeah, it should. It's actually developed to work on any other indice or ETF or stock. You just have to be aware, of course, of you don't want to take it into expiration. Be aware of like if things get in the money. Or just liquidity issues and things like that. So you want to make sure you're doing it on an underlying that has a lot of liquidity, which obviously the Qs and the IWM should have plenty of liquidity, has enough expiration cycles that are being traded as well. Let's see. I think there's a couple check marks that you got to check off. Okay, in OptionNet Explorer, which margin option do you use for your trades? Example, maximum absolute risk, current risk, etc. Well, I would just use in this case maximum absolute risk. So that way it kind of keeps track of whatever your maximum was, which in this case would be the current risk because there's only one adjustment possible if during the life of the trade. But usually if I'm doing something where I'm taking a percentage of the max risk, I just keep that checked. And that way it keeps me out of trouble. Do we need to monitor the trade all day? You know what? I'm surprised I didn't add this to the slide, and I should have. This is a check once a day trade. You check it once a day, and if nothing needs to be done, you move on, and that's it. So, that is something that I think I need to add somewhere in the presentation.
Yeah, it's good to know.
Yeah, I don't know why I didn't include this. Um, there we go. Save that, and I'll add that to the sales page as well. Great questions. What time of the day this trade should be placed? It could be placed in the morning. I like doing these in the afternoon, kind of after the craziness of the day happened. And that's usually when I like to check things as well, because sometimes the start of the day, some news thing comes out, and then everything kind of settles down by the end of the day. Is there assignment risk of the SPY options? If they're deep in the money and you take it really, really close and they're super deep in the money and you take it very close to expiration, then yeah. So that's why I never, and in the rules, you do not want to take this into expiration. Most of the time that's not going to happen, but you want to be aware of it. 3040 is not divisible by 65 cents.
I guess on your commissions, page 14,
All right, I have no
something
idea.
in the presentation.
Yeah, I'll have to check that. I'm pretty sure I'll have to double check my OptionNet Explorer. I thought I had 65 cents for the commissions. So maybe, I wonder if I have the larger commissions. It could have been that I copied over my larger commissions. Whoops. Let me see. Um, uh, uh, see, on my calculator here. So what was it, 3040? Sorry, I got a little.
Correct. Yep.
Let me see if I was. It could have been I was using 76 cents. because that's what my average is in and out for the SPX. So I might have copied over my 76 cents. So, so actually it should be a little bit higher, results from that. So thanks for that. Good catch. Yeah, 76 cents looks like what I was using. Could we enter a new trade as soon as the old one is done? Making it more than four. You could, but again, you want to just make sure. I mean, I developed it so that I'm picking like probably the best day of the week to enter it, for the, kind of best results based on what type of market movements are the theta decay that happens over a weekend, the volume, and the most likely traded expirations, that kind of thing. But people are trading more and more, so there's more liquidity and more expiration cycles happening all the time. So it's just going to get easier and easier for you to do that kind of thing. Do we need one software for the adjustment? No, just like all my other strategies. You can use Thinkorswim. You don't even have to trade there. You could just open up an account and fund it with a very small amount of money and just use it as a, like use their
Analysis tool.
tool to kind of look through things. And this one's so easy. There's only one possible adjustment you can make, if it needs, and 72% of the time you don't even need an adjustment. Or, some years are going to be different, obviously. But that's you don't need that. I like it because, I use it not just for analysis, but I'm also developing these strategies. So I want to have something that's really robust that I can test with, that does real tests that I can go into and literally look at things like in 5-minute increments. I don't want to do something where the test looks great because I got this automated system working, but it's not really giving me that look inside to see, those trades, those prices don't really look real. So when I do my testing, I make sure that those prices are as realistic as possible. So if there's something where the price jumps a little bit, in one 5-minute increment, I'm not going to use that. I'm going to use the ones that are, where the prices are sticking, to a certain amount, that looks like, it's more realistic based on my experience in trading. The performance chart includes slippage. So are these actual trades or simulated? Actually, I've done these trades, and the tests that I did, the 22 through 2025, those are a back test. So those are tested trades. However, I have traded this in the SPY, and I've traded, in the SPX, as I trade my A14 all the time with calendars and diagonals and things like that. So that you need a little bit more slippage, but with the SPY, I wasn't having any trouble getting filled with the same prices that I was seeing in the tests. So it should be pretty close. Now, of course, it's 5-minute increments. It's not doing it in 1-second increments. So there could be times where, the price might have been off by a penny or so, but it should be pretty accurate. It's not perfect. It's not as perfect as if I had, all of these trades actually traded in a real account. But I've just started developing this trade earlier or later last year, so I don't have all of the live trades for that. If you're choosing a starting system, should you start with the A14 or the TimeEdge? It's up to you. The TimeEdge is super easy. There's a lot less to do. But the A14, I mean, I've had a lot of beginners, and, it just depends on what type of trade, what your learning curve is, how familiar you are with trading options. Some people pick things up a lot quicker. God, when I first met you, Tom, I think it took me 6 months of just constantly having the same stuff repeated to me before it kind of clicked. And this was, I was letting my account be traded by, other people, not myself, because I wanted to kind of see what happened and not get in trouble. So, it just depends on what your learning curve is. But the TimeEdge is going to be a little simpler. So that might be something, they're both strategies that start with one order at entry. But you can have a possible more adjustments to do with the A14. The thing that they do have in common is you're only checking for adjustments once a day on either one of those strategies. And with the A14, it can get out of trouble. If the market's really kind of going crazy, it probably has a little bit more ability to get out of trouble in those situations, as opposed to just being closed because it's hit an exit trigger. So you might want to rewatch the roundtable for the A14. It's kind of hard to tell because everybody's different. Or ask people, ask people in the chat, what do you think? Discussion of hedging against big moves like Liberation Day. Well, the trade is already, it's kind of hedged at the rule set kind of has a built-in hedge in a sense. Hedging is great. If you have a whole, for example, let's say you have a whole portfolio and you're trading lots of different strategies and you got stocks and or whatever, you probably want to have a portfolio hedge that's kind of hedging your whole portfolio. But when you're trading individual strategies like these, it's kind of almost too expensive to have a separate hedge. It's usually built into the trade. Like with the A14, it's based on a broken wing butterfly to start. Well, a broken wing butterfly already has a built-in hedge. The AIC 22 has debit spreads as built-in hedges. This one has Vega as a built-in hedge because it's based on a time spread with positive Vega. So if we do get a big volatility pop, that's going to actually should help the trade. So widen its tent. So that's kind of already a built-in hedge, if that makes sense. And I'm going to talk about, that in the course too. Like, why do you have an edge when you're trading time spreads? What makes a time spread work the way it does? But again, you have big moves like Liberation Day or, COVID, obviously, things like that. Usually when you have the initial move, depending on this trade and where it's at, it can be just totally fine, or it can take a little bit of a hit, but you just exit. And then after that, once you're in that environment, usually those the following trades are just, being able to take advantage of that. So I don't think it's anything to be afraid of. But again, I've been trading for a long time. So, but those are things that would definitely discuss, especially in the course, because I want to show you, well, how does it handle a big move like that? Is the trade initiation dependent on the day of the week? I like to do it on a certain day of the week, like towards the end of the week, but it's not absolutely necessary. It's just my preference. I want to be able to take advantage of, weekend theta decay. But some people don't like that because they feel like, oh, well, then you have no idea what could happen over the weekend. But I find that it's a nice rhythm of just entering it towards the end of the week. I don't have to deal with midweek craziness or FOMC meetings or anything like that during that entry period. Is this a one-day workshop or multi-days? It's a multi-day workshop over a few weeks. So right now I've got 3 classes scheduled plus the bonus strategy. I might add another class. It just depends on how long it takes to get through the material. Sometimes it takes 3, sometimes it takes 4, sometimes it takes 5 weeks to get through everything. But usually they go for about 3 or 4 classes is on average to get through everything. And they're usually, over an hour long. So we're not like completely brain dead by the end, and my voice is still here and I can answer all of your questions on top of it. So that usually takes it in a little bit longer, like an hour and a half or hour and 45 minutes sometimes with all the questions. Are annual returns based on planned margin capital or ideal minimum portfolio size? They're actually based on the max margin used. So there's actually would be 2 percentages you can do. Like, for example, if we go back to here and you see this percentage of profit, there's the dollars after fees, is based on the maximum margin I used in that trade. In this case, there wasn't any, all of these didn't have adjustments, so the margin just remained the same. However, obviously it would be lower if I were to say, okay, I'm basing that off of $2,500 because that's the capital I'm allocating for that. So this is more for, trying to hit those profit targets based on the trade that you have on. But that's also a valid thing to look at, is like, well, what's my profit based on the actual capital that I'm allocating per trade or that kind of thing. But that's why I include like the net profits for these. So for example, if we go into here, you can see that, for $2,500 capital, 2 times a month, 10 lot SPY trade, for this period of time. The profit after fees and everything, the net profit was $59.06. So the account was more than tripled, from $2,500 to, seven, or over $8,000 if you add those two numbers up. So that's another way to look at it. And then what you could do, what I'm doing there when I talk about a 98% annualized return potential, for this particular test, that was based on the $2,500 of capital that I started out with. So I do the returns based on the capital, and the percentages for each trade based on, just what my target profits are, or to try to reach that. Hopefully that makes sense. All right. The performance chart includes slippage. So are these, we already answered that question. Oh, where am I? Okay. Tom, you want to check off some of those, or?
Did you do the military discount one?
The last one I did was the annual. I did number 29. I'm right on the military discount. Yes, a military discount will be available. I don't know how to. Tom will just tell me who's military, and I'll just give you guys a code to enter it. Or he said he can send it out, or I can send it out. He can just tell me who's who. So just ask. Just go to Amy at AM Options Alert, or Amy at Aeromir, or support at AM Options Trading.
Yeah, I'll send you the code that I
or
use.
Tom, and then I think I put in the same code, but I'm not sure. So maybe I'll try to match it to be the same one. And then
So
Tom tell me
on
yes.
the my.airmere.com, underneath your name, there's a link if you're military to tell you how to get the military discount. There's a code in there, and I just gave Amy that code, so hopefully you'll set up the same code
I'll
within
do
your
that.
system.
Perfect. I think I did, because I think you gave it to me before, but I'll double check. I'll make sure it's the same.
Yeah.
And that's a 10% discount, correct?
Correct. Yep.
Yes. Okay. Is there a monthly subscription cost as well? No, there is no monthly. This is a one-time fee. You'll get the workshop, you'll get the replays, you'll get the bonuses. Everything's included for just one fee. And you'll have that community as well. But when I do, as we're testing this community, and I'm thinking about, adding more to the A14 alert service, which is a subscription, I might start combining things into that, and try to keep everything segmented so you're not confused with what we're looking at with different channels. But that would be a subscription, not this. This is just a one-time fee. But you do get that community where you can chat with each other. Can you compare the A14 and the TimeEdge in terms of profit potential and margin required? Margin required for the TimeEdge, obviously, if you're trading it in the SPY, is going to be less. Well, what? Put it this way: for the A14, that's not true, actually. For the A14, I do an alert service. Obviously, I just do two lot SPX trade every week. And I keep it within $5,000. I don't go over $5,000 on that one. So it's actually about the same for both. Just a different animal. And the profit potential is also the same. And then the same, I think I already answered that. How many classes are there? Like I said, I scheduled 3 for the TimeEdge, 1 for the bonus, and 1 for the additional Q&A, but there might be an additional class needed for the TimeEdge as well. Can this price be paid in monthly rates? Oh, great question. So on this new system, when you go to, where am I? Let's see. Oh, let me get that up. Hold on one second. I'm trying to, Aeromir.com, TimeEdge. Okay. So if I go here, and I want to get access and join the workshop, and it takes me to the shopping cart thing. Then you have other options to pay, and two of them are Afterpay and Klarna, which I believe allow you to split the payments up. I've never used them before, but that's what those are for. So if you feel like you need to split the payments, that's what those are for. Tom, have you had people use the Klarna on the?
No, I've never used it.
Oh, I thought you had as an option.
Well, it might be. Thrivecart might have that, but think so.
Okay, I thought you had it up as an option, but it is an option. The way my workshops work is they're live right now, so you're not getting everything all at once because they haven't been recorded yet. But because they're recorded and somebody that's maybe buying after maybe one or two or all of the live sessions are done, they really literally have access to everything. I don't really have like a refund policy because you get everything. So for these, I try to make them, price conscious so that they're, just a one-time payment. But I did want to offer that ability to split up the payments, but it goes through those two companies, that Afterpay and Klarna. I don't know if you ever used it before, but basically you go in there and it sets you up, and then you just pay them like, is it either like, I think they'll split it up either in 2 or 3 payments, like maybe once a month. And then, you don't have to worry about paying like one big chunk all at once. So hopefully that helps. I have to do a test on that because I've never used it before, but that's what those are for. Where did I go? Is there a fixed stop loss on the TimeEdge? There is lost half of my account on a 5-day elephant shield trade. I thought the elephant shield, I'm not really sure what that is then. There's not a fixed stop loss, but there is a first of all, it's hedged. And secondly, there is a trigger, an exit trigger that you'll learn that, if it gets to a certain point, you just get out, you just close the trade. And that is what keeps you out of trouble, even if there's like some big move. I think the biggest loss was, let's go back here and see, not here with the full thing. So the largest loss was less than the largest gain in the expanded margin, and about the same in the minimal margin. So, you're not having these huge drawdowns. So if you have an average win, it's showing here in dollars of, $140 to $164, and the maximum loss, and you only had, a very few of them. But the average was 211 and the maximum was 300, even, with a big move down, let's say, or something like that, or here the maximum was 343. It's not capital killing. That's another thing that I like to build into my strategies is we don't want to blow up our accounts. That's, something I definitely test for. And then I believe that April 25th through the 5th, early April 25 and 5th of August. Those are included in early April 25, I believe. Not that one. I believe this last one was actually that trade. It was early in April. And then, because I wanted to include something that, had a pretty big move. 5th of, I know what you're talking about with that August 5th thing. I don't know if it was included here, but there are rules of which weeks to skip. And that could have been a skipped week. But if it wasn't, it will be included in the trade log. I don't have it up right now. I don't even have my Option Net Explorer up. So it would take me a while to launch and everything. But you can ask me that question again. And I can, give you that answer exactly when I have my Option Net Explorer up and see if that's included. But all of the trades in my tests are included, the trade log, so you can see what happened. And I did trade every week in 2025, even if I didn't include it in this full test here, because I didn't want 2025 to have more trades than, the other years, because it would have kind of made things a little cockeyed there. So, but I do include those in the time, in the trade logs, and I didn't see anything, that caused a big, drop or whatever. Slack channels, no, we're going to be using this new community in the new platform. So that's what we're going to use instead of Slack. So Tom won't be creating anything in Slack or Discord. I apologize, but we really want you to try to use the new community because I want to test it. I want to see, I want to get your input. And if we don't, if we have it all over the place, then I'm not really going to get the best feedback, I don't think. So I'm sorry, but I really want to get your feedback on it and see if it's useful. But, you don't have to log into something different, so that's kind of nice. In a look back, what are some of the indicators that have led to a losing trade? Usually, I like to stay away from like Christmas and Thanksgiving time. There's just not a lot of people trading. The markets are whipping around. So for me, for this type of strategy, it's more about those times when things are just like really low liquidity and not a lot of people trading. So small moves can, big moves happen with very, very few trades. And that usually equals very bad pricing. So I'd say that that's probably an indicator of not having a very good time. It doesn't mean it's going to be a losing trade, but I just don't think you're going to get great pricing. In the no touch bonus strategy, I do have some filters to filter out what might cause some losing trades there, like with volatility and so forth. How much of your own portfolio is allocated to the TimeEdge strategies compared to the A14, which I understand had previously become your nearly exclusive? Yeah, A14 is still pretty much my nearly exclusive approach. I'm doing small trades with the TimeEdge right now just because most of my trades are A14, but I may start to switch into like a half and half type of thing, or take a percentage of each, depending on which one's giving me, which one's easier to do is going to take my my attention. But maybe I'll do half and half. Right now, most of it is in the A14 still. Do you have any broker statements with this strategy? The back tests that I did are the hypothetical back tests, although they're done with real data. So it's not like hypothetical, theoretical data. Those are real prices of the SPY, those options. And I've, been trading for a long time, so I feel pretty comfortable with the type of slippage that's there. And I've seen the same type of results in my real trading of time spreads, calendars, and diagonals as well. So hopefully soon, like maybe the next year when I do a sale or something like that, I'll have the actual broker statements as well. If we can't make it to class, will the class be recorded and available within a couple of days? Yes. It's usually, so basically the classes will be, live on Zoom. You'll register, and then the class will be recorded to the cloud at that time, I guess is the way it's done. And then after that's done and it's processed, I will move it over into the class page, hopefully within 24 hours, but let's just say within 2 days, just to be safe in case there's, takes a while for Zoom to process it or something, because they are a little bit longer.
Zoom usually takes less than an hour to process a video.
Okay. So I guess it would be more of like, how long does it take to upload?
Yeah.
But, so I'm going to say like within 24 hours, but let's just be safe. We'll say within a couple of days, and they'll be available for you to watch and replay as you wish on your schedule. Are there any drawbacks of trading this on Tradier in terms of slippage? Tom, have you traded in Tradier? I know they have.
I've never had a Tradier account.
Yeah, I almost opened one, and then I was looking at the commissions for SPX, and after adding everything up, I didn't really see as much of a benefit. I think, they get you one way or the other, put it that way, is what I found. But, I would, again, post in the chats, ask other traders that trade with Tradier, that have traded SPY or SPX, or other, underlyings, and see what their experience is. I'm sorry, I just don't have experience with that platform. If we are in the A14 community, we need to monitor two platforms, Slack and the new one. Yeah, for now. But the reason why is because I'm going to have it in one place. It's either going to go back to Slack or it's going to be in just this new community. I really want to test this new community. And the TimeEdge is not, the A14 is a Slack community is an alert service. So yeah, you want to monitor it. The TimeEdge community is just like for you guys to chat amongst yourselves and ask me questions and things like that. I'm not going to be sending out any alerts with this at this time, maybe in the future, but I really want to just see how that community works. So it's more of just a general community about the strategy. You can talk and, with each other and share ideas and ask me questions and things like that. As opposed to the A14 alert service, which is literally I'm sending you out, an alert with the trades and the adjustments and the exits and all that kind of stuff and the bonus strategy. So it's a little bit different. So it's more important to monitor that than it would be to monitor the TimeEdge community. But I do want you to, test it out and see what you think, if it's going to be useful or if I'm going to just be using Slack in the future for everything. Does the community have a phone app? I'm going to find that out. Now, one nice thing is that this new platform is very mobile friendly. So when you go to the website or the community or click on the buttons, it's very mobile friendly. So it won't look funny on the screen. I'm doing this in a platform called Kajjabi, and it does have an app that you can download. I am not spending a gob of money on creating a branded app. So I will have to find out if you can get to my, workshop and community from within that non-branded app. So that's a good question. So I'll have to find that out. Yes, it's not an alert service. It's just a workshop for now. What VIX environment does the strategy work best in? With time spreads, a lot of people think, oh, it works best in a low environment. And then, if the VIX goes up because it's a positive vega, that's great. And if it comes crashing down, if you're in a higher environment, that's not good because it's a positive vega. But, because of the way volatility works in the front and the back, it's more important to look at a few other things besides just the VIX environment. There's lots of trades that can be fantastic during a very high volatility VIX environment that you would think, oh, I don't want to do time spreads because the volatility is so high. But there's more things to look at. And again, that's something that I'll go through in the course. Boy, lots of questions. Do you have a schedule of workshops beyond 7/17? Yes. Let's see if I can bring that up. Let me go. Whoops. See if I can bring that up. Hold on one moment here. See if that comes up and then I can go here. So I will share this real quick. Here we go. You can see the screen, Tom?
Yes.
Okay. So when you do sign up and you go to the class page and go to the dashboard here, you can see the upcoming live sessions. So right now we've got the first session scheduled. So basically I'm doing it on Tuesdays and Thursdays. So the 17th is a week from now, which is Thursday. Then the following Tuesday is the 22nd. The following Thursday after that is the 24th. And then the following Tuesday after that is the 29th. If I need to add another class in here, that would be on the 29th, and the bonus would be out another couple of days. You could, also, so it's here in the dashboard, plus you can click here and just see just the class schedule. And then for each class that's coming up, you'll have a registration link when you sign in. Okay. Where are we? Oh my goodness. Okay, I'm going to take 1 minute here to grab my power cord because I just realized that my computer is running out of power and I don't want it to shut off before we're finished. So give me 1 moment. Okay, where were we? Tom, where were we here? Lost track.
Let's see.
For some reason the check marks. You know what? Let me. Oh, it's refreshing. For some reason the
the schedule. Looks like you're on
It's not refreshing.
48.
Ah, here we go. Yep. Can XSP be used instead? It's not as liquid. Just keep an eye on it. It's a good, I like it because it doesn't have the like assignment risk, that kind of thing. But it's not as liquid. It doesn't have as many expiration cycles that are liquid either. I guess my concern is that I'm in both the A14 and Thomas Byron communities, and it is convenient to have all that in Slack, but have TimeEdge in a separate platform means yet another platform I have to monitor. So that's not great. Good point. Yeah, very good point. But like I said, this is not an alert service. So the A14 and Thomas Byron, I guess, is an alert. Does he have an alert service? It
He
makes
has
sense to
two.
have something. Yeah, so that you want to monitor that. The community for the TimeEdge, since it's not an alert service, it's just a workshop. It's just more for like when we used to have those forums where you could talk amongst yourselves. And it's also just a way of having me test that community. Just, for at least for a short time, just to see if it's going to be useful. Where will the recording of this workshop be hosted or based? And is lifetime? Yes, it's lifetime access. I mean, lifetime meaning as long as the website is up and going.
As long as we're still kicking, right?
Yeah, as long as we're still kicking. So, yeah, so you won't lose access. It's not something that's just available for the year or something like that. And it's going to be hosted on my website, amoptionstrading.com. So you'll have, a login there. This again, I'm just testing this platform for a few different reasons. One is it's more mobile friendly. Trying some different features and like the community feature as well. Trying to streamline things for me and Tom, so that we're not, working too hard on things and trying to streamline the support as well a little bit. So just kind of an experiment for both of us. Will you be bringing over the Slack channel to the new? Not right now. Right now, I like Slack, and for the alert service, it works great. So I'm not touching anything. I'm not touching any of my other workshops as well. So everything's there. I'm just experimenting. If this community thing is useful, then, I guess that's a possibility because it does have some features that I was just telling Tom today. We have a problem with imposters. People go into Slack, they'll change their name to me or Tom, they'll make it look exactly the same with the same icon, and then they'll start DMing people or sending messages. And most of the time, you guys are pretty savvy, you get it. Oh, this is not really Amy, but that could cause problems. So one nice feature of having it on this other platform of a community is that you can't do that. You will know it's me because there is a system embedded button that shows that this is me. I'm the one, they can maybe change their name and make it sound like me, but they're never going to have the system button attached to it. They can't. It's part of the system that shows that I'm the founder or admin, and that that's somebody that you can talk with. So it does have some neat features in it. So that's why I want to test it out. Plus, I like having a place for support in just one place. Upon initial edge, how many questions do we have? Holy smokes, we're gonna have to cut it off.
There's a lot. Yeah.
I want to answer all your questions, but I might have to email some of these. Okay, upon initial entry and fill, can we then set up a contingent order based on price? Yes, you can. So that's, another way. What I would do is I would set up a contingent order, and then as far as the adjustments are concerned, I would set up an alert if it hits an adjustment trigger. Because the adjustments can be tweaked a little bit to make it, depending, you might not know exactly what the adjustment's going to do until you get to that time, but you might, you should be able to kind of guesstimate which strikes would be used if the market moved a certain way. Can we trade at ES? Yeah, but I think the ES has options are 25-cent increment, not 5
If
cents.
the spread's over $5.
If the spread's over $5. Yeah, so it's probably not going to work really well.
Otherwise, it's 5-cent increments, I think.
Oh, okay, yeah. If it's over $5 or under?
Well, the option prices are like within 5 cents, but if a spread is over $5, or I think an option is over $5, then it's 25-cent increments.
Yeah, so you're going to have.
It's not as granular.
Yeah. So how bad is the risk of getting called out if you're using SPY instead of SPX? Well, again, don't take it into expiration. And it's not a huge risk. Have you ever been called out before, Tom?
No, and all you have to do really is monitor how much time value is. And if it gets down to like 5 or 10 cents, you're getting close to being assigned. But if you get assigned early, you're usually not going to lose money anyway. So it's usually
Right.
not a big of a deal.
Right. And again, I'll go over, what to look out for in the workshop.
Oh, and there's more imposter stuff. So I have a job that runs every 10 minutes. It's looking for expert imposters for me, Amy, Mark, Thomas. And it shows up on my homepage on Aeromir, and I take care of it right away. So it shouldn't be too much of a problem anymore because I see them right away.
Yeah, yeah. It used to be a much bigger problem for sure.
Yeah,
Um,
I have the API looking in every 10 minutes. So
yeah. What software is needed besides trading platforms such as you don't really need any other software? Do you trade this in FOMC, CPI, GDP weeks? Yeah. Uh, I'm not really, that's not one of the things I'm looking for, but if that's something that is a concern for you as a trader, then you can skip those weeks. I am assuming I would just let set up the trade and have an alert in case an adjustment would be needed. Yeah, and you only check once a day for an adjustment anyway. It's not like even if an alert went off in the middle of the day, I wouldn't do anything. I would wait until towards the end of the day and just check it once a day and that's it. Just like the A14. I try to make it as simple as possible because a lot of stuff, there's a lot of movement in the middle of the day and I just, I just want to ignore that noise. So this is not something that needs to be adjusted in the middle of the day. So even if you set an alert, you're not going to be glued to your screen. You can just set an alert for, hey, check my trade at, such and such time. And you know, if the trigger's hit by that time, then, you don't even have to look at it at all. If it's not hit, you can do it that way. What I can see from the curves, technically delta neutral trade, yes. Okay. How it works when the market's more aggressively up. Did you test it on larger time frames in different markets? I did not test it on larger time frames. It's not, it's meant to be a short time frame trade. And yes, I did test it in quite a few different markets, choppy, there was a lot of different things going on from 2022 to today. The markets were, going down, they were going up. There was some, high volatility. There was some low volatility. There was some steady up moves and some steady down moves and some there was lots of stuff going on, lots of choppy stuff, especially recently. So yeah, all of that was certainly tested through. I do use Greeks. You do not need OptionNet Explorer. You can just use, Thinkorswim. Uh, strategy in options, do strategies work forever, or is it like algo trading and it stops one day? I try to make my strategies last years and years. Are they going to work in certain situations better than others? Yeah. But so the strategies that I make, they should work. But things like, for example, the asymmetrical iron condor, when I first created that, I traded it in the rut, and the rut was about, I don't know, I mean, less than half of the value that it is today. So instead of trading it exactly as by the rules that I was using back then, I went back and I refreshed it for today's market. So that's generally how I do that. I assume we are not doing all naked open short trades. No, everything is covered. There's defined risk in all of my trades. There is nothing that's naked. Everything I do has defined risk and some sort of hedge built in. Your site shows second class on Thursday. Do you mean Tuesday? Oh, thank you. Yes, you're correct. I will change that. Let me write a note to myself to do that, actually. Let me get, I should probably put document. Let me write some notes here. Fix. You for catching that. Okay. All right. Um, let's see. The system looks basically like calendars and diagonals with infrequent adjustments. Does it primarily rely on near-term, weekly, short-term front-end expiration for the bulk of the profit? That's the way all time spreads rely on that, of course. Your time, your theta decay is going to happen a lot quicker on the front cycle, but it also works with volatility as well. So those are the two pieces that work with time spreads. Theta decay on faster on the strikes that you sell, and volatility changes. Those are the two things that will give a time edge its edge, or a time spread its edge. How much capital is used? Let's say 10,000. I already talked about capital. Would it be a good strategy to trade in the times of low volatility and A14 and high volatility? It should be able to be traded in both, and same thing with the A14, although I think that in really low volatility, this might have a better edge, perhaps, actually, as long as we're not yeah, because it's a positive vega, so probably have a better edge, the time edge would. I'll be on a plane for class one. How do you expect recording? The recording will be available within like 1 or 2 days at the most after the class is recorded. During those times when it was performing sideways, did you analyze what factors led to those? Just the market was just moving in one direction a little bit too much and got stopped out, basically. This trade looks like class basic calendar. What makes it different? What makes it different is, yeah, this is something that I try to explain to people as far as like, if you just look at a graph and you see a strategy, like an iron condor or something, or calendar, or whatever it is, that setup, that structure can be traded a million different ways. It really depends on when it's entered, what time of day, you know, are there any filters for when you put on a trade? What underlyings are you doing it in? Which strikes you're choosing? When are you doing your adjustment? When are you doing your risk management, your adjustment style? What are you doing for an adjustment? All of those things, there's so many different combinations that you can do. That's what makes it a different strategy. That's what makes it a trading plan. So it's not that, it's a calendar or a diagonal, but all of those other things come into play, and that's what makes it a trading plan. So that's kind of what you want to look at. Because you could trade, you could set it up the same way even, but it could have completely different results depending on how you trade it. SPY are not as good as SPX. SPY are American share settles dividends, no 60/40 tax rule. Exactly. SPX is going to have a lot of benefits, but SPY makes it accessible for smaller accounts and for very low slippage, which is something people ask me about. But that's why I developed it for the SPY and the SPX, because those are the two most common things people like to trade. If you're only checking once a day, are you leaving resting stop loss and profit target orders? I'm just checking it once a day, so there's no resting. There can be a resting profit target, but no resting stop loss, because I want to look at the end of the day where it's at to decide whether it needs to be closed or not, or if it can be adjusted. Could work with zero DTE options. Totally different trade, totally different strategy. You gotta, yeah, that you wouldn't. Doing adjustments on a zero DTE is pretty difficult. Gamma, is just really, really high. It's just a completely different way of trading. Not that it can't be traded that way. It would just be a different strategy.
Hey, Amy, we've
Yep.
got still like 25 questions. Did you want to stop at some point or
You know what?
just
Let me
like,
see if a lot of these are this. I'm seeing some duplicates. Let me just see the conditional orders. We talked about that. Can a losing trade left unattended for a day, can it cause the losses to grow out of whack? I mean, if you're not monitoring your trades, then lots of things can happen. So you do want to monitor them. But again, just once a day. Do you have max VIX? No, there's no max VIX. There's different things like I mentioned earlier about checking. It's about the way volatility works on the back cycle as well. So there's more to check in. It's not just a VIX thing. We talked about the crash in the market. That's included in the trade logs. Yes, there are systematic rules. How many option strikes? It depends on if there's an adjustment. Very few. We already talked about the recordings. When a position needs an adjustment, you can choose to close the trade, but it's a completely rules based, so you'll know if an adjustment can be made or not. Yes, you can diversify away from the SPX. Why not trade one SPX? I would just do two. I would just do at least two, just so the adjustments make sense. So yeah, I prefer the SPX as well. But like I said, SPY for just making it accessible to smaller accounts. We already talked about my capital for the A14. You'll have to decide as far as how much capital you're using, how much capital you're allocating. That's going to be personal to your own situation. Tom made an AIC 22 Slack channel. Can we just make it? Not right now. I really want you guys to try this community. If it doesn't work, we'll move it to the Slack.
Yeah, we can if we want to, but for now, let's try
Just
it without.
just because I know I apologize. I just want to see, if I kind of, force you guys to use this community for communicating, we can at least get some feedback for it. And then we can, talk about saying, okay, PDT rule issues. Yes, there is PDT. We're going to talk about that in the class. There are ways around that. The easiest way around that is to just trade in a non-margin account. Just do it in a cash account. All your retirement accounts are cash accounts. You don't do margin there. There's no reason to have margin for this strategy. No, I'll show you the SPX. The same rules for the SPX. It's different from the time zone. The time zone is more of a conceptual trade that teaches you how to adjust these strategies with all sorts of different adjustments. So it's a completely different learning curve for that, but that's also something I'll be starting on soon again to refresh that. I will consider doing alert service. We talked about that. Yes, the trade is entered as a single order. Is it possible to close the trade with a single order? Yes, it is. And maybe not all the time, but I think most of the time you can, because there shouldn't be more than four. It wouldn't be all the time that you would be able to do that, but I believe so. I'll have to revisit that. Which is less risky, A14 or TimeEdge? Probably about the same. I guess, yeah, about the same. They're both hedged. Maybe a little bit different. One might have an edge in different markets. Somebody talking about Tradier. Stops are done only on single legs and on spreads. Yeah, I'm not doing a stop loss I'm not putting in as a conditional order as a stop loss. I'm doing it more as I'm closing out the order if it gets to this, if it gets beyond a certain point, that kind of thing. Fills are bad on Trader because that's that. Do we need to set a conditional order to get out or get in? You don't have to, no. Norton is telling me that your website is dangerous. Okay. Obviously it's not, but I'm sure you're aware. Okay, thank you. It's probably because it's new. I don't think it's dangerous. It's being hosted on Kajjabi. They host a lot of websites. They've been around for quite a while, so kind of surprised, but shouldn't be dangerous. Adjustment needs to be done during the day whenever is necessary. No, just one normal checkpoint per day. Crash down and volatility create a big drawdown? Not necessarily, because it depends on what volatility. That's something that's going to be going on in the class. That's a misconception about time spreads. It's not that a crash in VIX overall is a problem. It is a combination of what you entered the order at and what your volatility changes are in both the front and the back cycles. All right, I did get through all the questions. Wow.
Did you get that last one on the PDT?
Yes. I don't see 95 is blank. Oh, let me refresh. Sorry. I think for PDT rules, if we open a trade at the end of the day and then adjust it once a day, would not ever apply. I'm not sure.
It's only
I
if
think
you
this has
open
to
and
do
close the same
same
strike and
strike.
the
Yeah.
same in one session. Yeah.
Right. So there's ways of avoiding it. And then again, if it's like in a retirement account or a cash account and you don't need this to be in a margin account, you don't have to worry about that. Or of course, if you have $25,000 or more. All right. So I think I got through all the questions.
Yeah,
Hope you
that's
guys
it.
like this and look forward to seeing you in class. And again, we'll talk about the community. I do like Slack. I agree. I just want to test this out and since this is not an alert service, I figured this would be a good way to test it out because it's not as important to, monitor it as much. It's more just for chatting with each other about it. But
Right.
we'll see how it works. We'll see if there's any pluses to it or not. Sounds like maybe not already. So,
Well, we'll see. We don't
we'll see.
know. That's why we're
You
doing
know,
it.
exactly. All right, everybody. Thank you so much for joining. I appreciate it. I hope to see you in class next week. And yeah, if you have any other questions, you can just reach out. So,
Great.
all
Thanks,
right.
Amy.
Thanks,
Sounds
Tom. I
like a great
appreciate it.
trade. Hope everybody that's interested takes advantage of it. We don't want to have to raise the price, but inflation and everything. So we get it while it's hot. So, all
Yeah, there you go. I like that. All right. Thanks again.
right. Thanks, everyone.
Bye-bye.